People used to say it is speculative. बॉम्बे में बैठे लोग सट्टा करते हैं, LIC करती है, ये करता है, 5-6 लोग बैठ के मार्केट को मैनिपुलेट करते हैं, फंड मैनेजर मैनिपुलेट. These are various kind of stories. The conspiracy theories keep going on. If anybody comes and tells me, this is what I told you 3 years back, 2 years back, 1 year back, this is what you should do, I simply ask them, please send me your wealth statement which you filed with the income tax department. I need to know how much allocation you made in the gold. You were talking about 3 years for the gold, fine, but out of a total portfolio, how much is in gold? Many salaried guys, and particularly they are highly educated, they believe they can do everything themselves.
Yeah.
And that, in my opinion, is one of the worst decisions you take in life. And I'll make an analogy why. Because you hear that, some people saying DIY, we can do yourself, we can do ourselves. When influencers are talking about that you can do yourself, it is not the question of a skill, it is a question of behavioral part. Mark my word, over the next 3 to 5, 10 years, equity will outperform gold and silver both.
Hi guys, welcome to another podcast of Aspero. And today's topic is, really important for Indian retail investors. Doesn't matter which background you come from, what is your exposure to in the market right now, because this isn't specifically about stock markets. It's more about why, most of the Indians never create real wealth in their lifetime. There are some shocking data points that we'll discuss in this particular podcast. And our guest today, Mr. Vijai, will help us decode the reasons behind them and what can we do to improve our strategies, to improve our mindset towards wealth creation. So do watch this podcast till the very end. I'm pretty sure that you'll gain a lot of insights which you can implement in your daily lives. Hi, sir. Welcome to the podcast.
Thank you very much.
So, sir, last time we sat, we discussed about, the potential of wealth creation in India. We talked about why retail investors can achieve their dream numbers like 10 CR, 100 CR, right? And it got a, very good response. You have 100K views on it. And so today's topic is that why 98% of Indians are never able to create, the kind of wealth that they desire in their lifetimes. And to start with my first question, there is one very shocking data point, which I came across while, researching for this particular topic was that in FY24, the amount of taxpayers who filed, their incomes 1 CR or above were only 220,000. That's not even 0.5% of the population. It's far less than that. Yes, we can say that, a lot of Indians don't file taxes, some, do a lot of other things, but still it's a very low number for the kind of dreams and aspirations this country has now. So why do you think, that is the case in your opinion?
So this question need to be answered from 2-3 perspectives. One is that out of these so many people, around 35 crore plus are below 14 years of age.
Right.
And for every year, you have 2 crore people. So if I take from 14 to 18, by the time you need to file income tax return, you can add 10 crore more. So 45 crore. Mm-hmm. And lots of, people in the families, the homemaker don't work, particularly the ladies don't work. There's one part. The second part is that one need to understand that these data has to be compared from historical perspective. The per capita income at the time of independence was nothing. From that, GDP has expanded 500 times. And one need to keep in mind is that when we compare ourselves with the Western world or China or other countries in the world, one need to keep in mind that for 200 years our country has been looted. The country has become colony to supply cheap labor, cheap raw material to the Britishers and other part of the world. If you look at Japan, post the Pearl Harbor, they work very closely with the US, and Japan is a very tiny country. Right. If you look at China increased the per capita from 2,000 to 12,000 USD. It happened because the Western world helped China to become that, because they wanted to transfer the low tech and high polluting industries out of these part of the world. Yeah. If you look at the entire Western world, be it Belgium, France, Denmark, all of them had colonies in South Asia, in Asia, in Africa, in America. So they have minted money for 200, 300 years. Right. India was a complete receiving end of all the onslaught. And now we loot, and 200 is British era. And before that, we have Nadir Shahs and all kind of people coming and looting this country.
Roughly 500, 600 years.
So when you have that kind of thing, people don't have a confidence. And the post-independence, we have a socialist regime where making money was considered to be a bad thing. So if you look at movies of 60s and 70s and 80s, hero was a poor guy and the villain was a rich money lender or an industrialist or money makers and hero was a mazdoor.
Right.
So always, the way the poverty has been marketed in this country. So we never had this kind of aspirational. And I do remember, one of the very interesting, comment made by an economist that if you watch Mrinal Sen movies, how can you ever imagine to be prosperous? So there's a historical background.
Right.
From that we are coming. The new generation is much more confident. And, if you look at cricket, I think 15, 20 years back, we were very defensive, very, mindset was very different of Indian cricketer compared to other cricketer in the world. Now that mindset has completely changed. You will see similar kind of trend happening, but it will take time. It will not going to happen overnight. So one need to keep that thing in mind. But interesting point is to look at the trajectory. Number of income tax return filers are increasing. People who are filing income tax is increasing. GST, custom duty, all of that, if you look at data, we have seen increasing trend in tax compliances in this country.
Right.
And the trend, what is more important is not the base, but the trajectory. The trajectory looks very, very good. So I'm very, very optimistic. I don't think in last 35 years of my journey of watching economy market, I was as optimistic about India as I am today.
Right. That's great. I think you have a lot of people look at this from a very negative standpoint and they get very, very carried away that India mein kuch nahi ho sakta. But the way you have explained the nuance of it, I think gives empathy to that entire context of what we have been through and how things are changing and where we can go in the future.
Yes.
So I think that was wonderful.
Thank you.
One interesting, although in this particular segment of data, I would want to highlight. I'm sure there might be enough reasons for it, but India, let's say, whatever states we have, the major cities that we have in India, there are particular states that always lead the chart in terms of the taxpayers, the wealth creation hubs who contribute to the taxes most. So obviously Maharashtra is one of the top ones, right, when it comes to individual income tax filings and also corporate taxes. So, and there are other states also which are contributing, certain states from the south, one or two states from the north. But largely Maharashtra has been a complete takeover compared to other states. So why do you think that is the reason? Because obviously we have spoken about the context of history, that what entire India has been through, but then there are certain pockets which have done really well. What is the difference? Why do certain states have lagged behind? And because obviously now aspirations are rising even from tier 2 cities, tier 3, tier 4, right? These people have now realized, because of the digital consumption that is happening, that what are the possibilities that they can also have in their lives. So why is there such a paradox right now and how can we solve it?
So why Maharashtra lead? Very honestly, because the BSc and NSC is here.
Right.
Most listed companies' headquarters are here. So naturally, corporate like Tata's, Birla's, Ambani's, their headquarters are in Mumbai. So naturally, corporate taxation, they will lead. Most banks' headquarters are here. HDFC, ICICI, Axis, SBI. So if you look at the entire BFSI segment, which created huge wealth in last 30, 40 years, most of them are headquartered here.
Right.
Bollywood is here. The senior management of most of these companies are here. That's why the data look little tilted in the favor that Mumbai is generating more revenue. But I'll give some very interesting data, other data as well for you to look at. If you look at top 10 exporting
States
districts in India.
Districts, okay.
Okay. Mumbai have Maharashtra. Outside Maharashtra, Mumbai, Pune, and one more city is outside Mumbai, MMR region. Okay. Interestingly, Gujarat have also 3 cities. Actually 4 cities. Jamnagar, Surat, Bharuch and Ahmedabad. So that's one data point.
Right.
The second data point to keep in mind is we keep comparing ourselves with China. But the 5 Indian southern state of India and plus Union Territory and Haryana and western part of India are growing as much as China for last 20 years.
Wow.
It's incredible data. So when you look at what is happening, that certain state in India, because of legacy issues, they are not growing as fast, like West Bengal has big population, UP, Bihar. These are the state with a huge population, but they are not growing as fast as other
As they
states are growing. And that's why India's GDP number looks low. But I think UP is on the way, on the curve coming up. Okay.
Right, right.
So if UP join the gang, then the India GDP to look at 8% kind of numbers look very, very visible. But within India, 5 southern states, Maharashtra, Gujarat, and Goa, and you look at Haryana, they are growing as much as China.
Right.
So just don't look at income tax data because the corporates are here, the big CEOs of various companies, the senior managements are here.
Right.
Because of that, the numbers are looking different. But if you ask me, tech companies,
Right.
where are the tech companies located? Except TCS, most of them are actually in
Bangalore.
Delhi.
Right.
And now if you look at the entire fintech, the wealth tech, the consumer tech companies, the hub is not Bombay.
Yeah.
The hub is actually somewhere else.
Right.
And what you find something very, very interesting. When I did my commerce graduation and I was looking to come to CA to do CA, most of us migrated to Mumbai. When I look at lots of people in my families and relatives, very few people are coming to Mumbai.
Yes.
The young
that
generation is
the-
going somewhere else. So what data you're seeing right now, the data may look very different from 10 to 20 years.
Right. I think, that is about to set in
Yeah,
when, let's say, the next 10 year of data will come through. Because, yes, you're right. The most obvious choice for you today is either Delhi NCR or Bangalore. Like these two areas have been leading in that front. Right. Absolutely. So, sir, next question is, we are obviously talking about the context and everything. But definitely we have had a rise of obviously the white collar jobs and the people earning good salaries, right? Post liberalization, we have had people working in companies like Coca-Cola, ITC, and all of that. All of these companies, senior management guys or even middle management guys have made good money, right, in their salaries. But still, we see that their retirement corpuses or the amount of wealth that they create at the end of the day is something. Let's say what they would have hoped for does not match that number. Despite having good salaries, ultimately maybe they're not able to invest well. Their investment decisions have, let's say, not been right. Maybe they bought something like in real estate and suffered, let's say, for a long period of 10, 15 years where their money got blocked or something else has happened. So why have we been behind on that front? I'm especially talking about that maybe 1 or 2 or 3% of the population that has good money in their hands, but was still not able to compound in the way that they would have imagined.
So it's very interesting. Suppose you're 1 crore CTC, at least 35% will goes in paying taxes.
Right.
So what left in your hand is 65. And then your 12% EPF, 12% company contribute 12%, you contribute 24% going into 8%, and nobody want to touch that money.
Right.
Very little allocation has gone into equities. And that is the one reason that people have not created wealth. And the allocation has gone into equities when the equity performance has been very, very good. When the equity performance has not been good, perhaps that is the best time to look at investing more. People get scared, shut down their SIP, and look at moving somewhere else. Today, wherever I go, the discussion is about gold and silver. 2 years back, the discussion was about mid and small cap. Before that, the discussion was specialty chemical, PSUs and all that. So and defense and infra and all that. So people love to chase the hot hand. And that is the one reason that the trust in the managed assets is not as high as the trust is into physical asset. Because, and definitely what you rightly mentioned, a lot of people has made a very bad decision about investment. People lend money to friends. Lots, we discuss about debt, we discuss about, very honestly, we discuss about precious metal, we discuss about equities, but very rarely we discuss about what went wrong in debt. Lots of people gave money to their friends, they gave money to cooperative bank, lended money into high debt product, and lots of money got lost there. So I think it is very important to look at that part as well. And if you look at many salaried guys, and particularly, it means they are highly educated, they believe they can do everything themselves.
Yeah.
And that, in my opinion, is one of the worst decisions you take in life. And I'll make an analogy why. Because lots of time you hear that, some people saying DIY, we can do yourself, we can do ourselves. When influencer talking about that you can do yourself. It is not the question of a skill, it is a question of behavioral part. Suppose I look at myself. I am self-motivated to work out. So I don't need anybody's help. I can do it. But my wife and my kids are not self-motivated. For them, I hire a trainer. If I believe, it is very stupid on my behalf to believe that my wife and my kids will be as motivated as me when it comes to health.
Right.
They may be very good in something else. So there's a very big disservice done by people when they say DIY. And why people don't trust financial advisors or anybody? Because India is a low trust society. Either we trust the big brand like HDFC, ICICI, SBI, or we trust morning walk uncle, which he has no stake in the game. He has no stake in the way of financial will be managed. So I think these are a couple of points, and I think when you spoke about the lower middle class and poor people and middle class people, I think mindset is a big issue. First, you have to believe that you will become rich.
Right.
That mindset has to be there. And when you believe that you can become very wealthy, you can be very successful, you start working towards to make yourself very successful. Else it won't happen.
Right. So, sir, two questions on this from whatever you said. First one, you said, that mindset is really important. And because you're a Marwari, you come from a place where, the way people think about money is definitely much better compared to maybe some other states, because we have always known Marwadis to have that kind of that baniya mindset and all of that. So what are the kind of things, let's say, this community has developed over time that you feel, in your opinion, sort of help them to have that mindset that they will create wealth? Something that you can share on that aspect.
So I can share my experience is that we have been taught that before you spend money, think how much time or effort it took to earn that money. So whenever you think about that, okay, I need to spend this money. So my dad will always ask me, अच्छा इसको कमाने में कितना समय लगेगा? वो सोचो, खर्च करने में 5 मिनट लग जाएगा. इसको कमाओगे तो कितना लगेगा? Second thing, they always encourage us to own appreciating asset, not depreciating asset. So they haven't asked us to buy big consumable items और घर बनाओ तो घर के अंदर बहुत decorative pieces डाल दो.
Right.
उनका mindset था कि आप land लो, जमीन लो, equities में invest करो. So they always encourage us to invest in appreciative business, appreciating assets और धंधा करो. मतलब धंधे में आप गलत जाओगे, you will go wrong, but you will learn lots of lesson and respect Lakshmi ji. That was very, very. And if you look at योग वशिष्ठ, इसमें गुरु वशिष्ठ बोलते हैं, अर्थ का बहुत महत्व है. So it is not that. So in spite of all these teaching where money has been given a bad word, but deep down in our Sanatan Dharma, earth had lot of meaning because through earth you can do lots of things. So it was, at least in our mindset, our psyche, money was given very honestly due importance. And if you respect money, money will respect you. Right. So we have been taught from day one that, and we have seen a lot of people who are not from similar background. They do have money, but they're so scared to invest.
Right.
The mindset is, we are not scared to invest. We are not scared to, take risk. Right. Because unless you take risk, you will not gain anything out of it. So, so we also take very calculated risks. So respecting money, thinking about before spending money, how much hours, how much days it took to earn that money.
Right.
And then taking a calculated risk is taught to us from day one.
That's I think brilliant. We'll put all the points down here so that people can sort of have a checklist when they think about the mindset.
It may not be exhaustive, but I'm just here for the paucity of time.
Yeah, definitely. You have tried to educate people about equities, mutual funds, and all of that, right? Now, why I'm asking this question is because I think a lot of people, like you said, that there is an inherent fear towards maybe slightly volatile, riskier, or appreciating assets that we have. How were you able to convince, let's say, a typical Lalaji, in a village, right? कि आप म्यूचुअल फंड में या स्टॉक्स में पैसा डालो या फिर कोई ऐसी एसेट ओन करो जहाँ पे मे बी आपको आज तुरंत रिटर्न नहीं मिलेगा या फिक्स रिटर्न हर महीने नहीं मिलेगा, आपको एक पीरियड तक होल्ड करना पड़ेगा. सो हाउ आर यू एबल टू चेंज दैट साइकोलॉजी ऑफ सर्टन पीपल? बिकॉज आई एम श्योर बहुत लोग के चैलेंजेस ये होते होंगे दैट द न्यू जनरेशन इज डेफिनेटली एक्साइटेड अबाउट दीज अप्रिशिएटिंग एसेट्स, but they are not able to, let's say, communicate or convince their family members or others. There is a lot of dispute within the family. So what message can you give them so that their parents or, the grandparents can understand about this?
Very interesting. And not every time we have been successful because many times people get completely convinced with your logical argument. but still the baggage they carry,
baggage of
it
fear,
allows them not to allow them. So even for them, we created some solutions to help them to understand. So let me explain the way we used to explain, the way you asked to explain, and keep changing with changes in time. Whenever you talk about share market, people used to say it is speculative. बॉम्बे में बैठे लोग सट्टा करते हैं, LIC करती है, ये करता है, 5-6 लोग बैठ के मार्केट को मैनिपुलेट करते हैं, फंड मैनेजर मैनिपुलेट. These are various kind of stories. The conspiracy theories keep going on. The way we used to approach is very simple. We used to ask कि शेयर का मतलब क्या होता है. शेयर का मतलब होता है हिंदी में अंश. अंश का मतलब हिस्सा. जब आप शेयर होल्डर बनते हो तो व्यापार के हिस्सेदार बनते हो. तो वो लाला जी से बात करते हैं. लाला जी को बोलते हैं आप क्या क्या माल बेचते हो. So he sell lots of stuff. So you'll ask them, which company manufacture this product?
Right.
From whom do you source this? So let's argument's sake, the cement dealer,
Right.
30 years back.
Right.
So if you ask him, would you invest in equities? No. What you're selling? You're selling cement. Who manufactures cement? So Grasim manufacture, L&T manufacture, whosoever the company, India Cement manufactures cement, ACC manufactures cement. How good is that company? He's a dealer of that company. ये तो बहुत बढ़िया company है. Do they excuse you of every penny? बोले yes, सारा पैसा वही कमा के ले जाते हैं. So what do you do, sir? They are listed. You can buy them.
Right.
Somebody's HUL's stock is somebody's Maruti's dealer or some other car company dealer. So you tell them. Or somebody dealing with the bank. So you tell them you're dealing with the bank, you know how much money his bank is making. So this is the way. Third, we say, suppose sir, आप आपके शहर में हो, भोपाल में हो, इंदौर में हो, अजमेर में और कहीं भी, देहरादून या साउथ में किधर भी, and you are in a small city and you are one of the leading business person of the town. What happens suppose you get opportunity to invest in 20 other leading business person of Dehradun?
Right.
नहीं यार, और what will happen to your wealth 20 years down the line? बोले यार तो अच्छा पैसा बनेगा because I'm investing with all people like me. I say equity market give the opportunity not of Dehradun or Ajmer but India and sometime global. So what do you think Ambani's at that time Tata Birlas and Dalmias and all these was big guys, now Tata Birla, Adani, Ambani. You ask them, what will happen to these companies 20 or 30 or 40 years down the line? Suppose you buy businesses of 200 leading industrialists. So your portfolio will grow. ये समझ में आता था. The problem is that, but the prices goes up and down. So you explain. So I used to go with a chart of Grasim. Here is a 20-year profit growth of Grasim and here is a 20 or 10-year market cap of Grasim. It worked clockwise. There could be a period of 3 or 4 years where Grasim profit is surging but price is not moving or vice versa. But long term, this is what happened. Still people will not get convinced. So I would tell them that please put money in debt fund and the gain you transfer into equity mutual fund. That story still works today. Whenever somebody get concerned about market or geopolitical risk or whatever it is, I say no problem, sir. You park your money in equity arbitrage fund or debt fund or keep money in FDs. और जो उसका interest आ रहा ना, please put that money into equity mutual fund and you see the journey. You are not playing with the principal, you're just putting gain into equities. Right. And then the slowly confidence builds up. But what is most important in the whole journey is handholding, the right kind of communication with the client. And the communication goes on lifelong. It doesn't like at one event or one episode or one meeting, it gets over. Because it's very funny in India. India is a country where everybody is expert in everything except their own job. So what happened? The guy got a portfolio. Then in the morning walk, somebody comes and tell him, when the markets are rising, have you invested in IPO? Mutual fund तो बहुत मजा नहीं है इसमें. I've invested in VCP. When the markets are down, I told you invest in FD only. Now 3 months back, my son told me to invest in silver. He's in US. देखो मैंने silver में इतना पैसा डाल दिया. So you know हम कान के बड़े कच्चे होते हैं. So जो सुना वो accept कर लिया हमने.
Right.
We haven't seen his portfolio. One of the best proof, you know, if anybody, so one advice I'll give to people, if anybody comes and tells me, this is what I told you 3 years back, 2 years back, 1 year back, this is what you should do, I simply ask them, please send me your wealth statement which you filed with the income tax department. I need to know how much allocation you made in the gold. You were talking about 3 years for the gold, fine, but out of a total portfolio, how much is in gold 3 years back?
Right.
Then the whole story
Changes.
changes. Because gold has delivered 65% return. If you're so good, you could time the market, like silver deliver more than 100%. If you're so good, you could time the market, various sector, various asset category, then you would be generating 50% CAGR, which is even not even generated by the rest of the investors.
You should have like then 50-60% allocation towards gold and silver.
होना चाहिए ना.
Right.
बोलना बहुत आसान है.
But sir, here's one, let's say not a counter argument that I would make for, I'm not talking about silver, but about gold. So I was looking at the data of last 25 years. I'm not talking about 1, 2, 3 years. I'm talking last 25 years of gold versus Sensex. In last 1 year, so obviously it's very biased data, but last 5 years, 10 years, 15 years, 20 years, 25 years, gold has nearly beaten Sensex at all regards in terms of annual returns. So point I'm trying to make is that obviously when our mothers buy gold or families buy gold, they're not buying it from the perspective of that we are taking it from the perspective of investing. They're obviously buying it for their personal reasons, and maybe yes, they have a certain security sense in mind कि बुरे टाइम पे ये काम आती हैं चीज़ें and फ्यूचर में कभी कुछ हो जाता है तो ये काम आ जाता है. But why shouldn't we have like a 20-25% allocation towards gold, given that in last 25 years it has beaten Sensex? Number two, why? Because there is gold also gives you an opportunity to have a hedge against the rupee depreciation that keeps on happening and also against the dollar. So is it not right to have gold at least 20-25% even through maybe gold ETFs or physical gold? Like, wanted to know your opinion on that.
So 3-4 ways to answer this question. The number one is that people made money in gold. One need to understand very important lesson from that. They made money in gold because they never had a view. You never thought about this or that, interest rate ऊपर है, मोदी आएगा कि नहीं आएगा, ट्रम्प क्या कर रहा है, terrorist attack हो गया. You never bothered about any event, any macro.
Right.
You just kept investing with the intent never to sell.
Right.
That's why gold made money for you. So that is the one thing one need to keep in mind very, very clearly.
Right.
Second thing, whenever people do comparison, there's a lot of intellectual dishonesty in these data points. The dishonesty is that when you compare Sensex number or Nifty's number, only Nifty numbers are taken. TRI is not taken. So dividend yield 1.4% compounded over a 25-year is not taken.
Right.
And so the right thing should have been compare gold ETF versus Sensex fund. Because what happened when you buy gold, the prices you see on the chart is never available to you. You either buy lower level, you buy at the higher level and plus pay GST. And when you sell, you don't sell at that level. But forget about all these things. Okay, let's assume that what data you give is right. We just don't look at point-to-point return. We also look at rolling return.
Right.
In rolling return basis, more than 2/3 time or a 10, 15, 20-year period, equity outperform gold consistently. And when we look at 25-year data, it is very important to look at a starting point. From 1980 to 2001, the gold has come down from $850 to $250.
Because central banks.
So the asset has underperformed for 20 years
Right.
and depreciated 66%. That was the starting point of that asset.
Right.
And then we are doing comparison.
Right.
One more point to keep in mind is that India is not the story of Nifty 50 and Sensex. Most exciting thing in India is happening beyond Nifty 50 and Sensex.
Because they have their own limitations.
They have their own limitations and all kind of thing. And one more thing to keep in mind is that contrary to what people believe, equity is the most predictable asset category. How do you predict gold? How do you predict silver? We are saying because demand is rising, so people are speculating, people are buying because a lot of more people are buying. It created liquidity, sentiments are very positive. So when you look at gold and silver, you need to figure out what a normal investor wants to buy, why they want to buy. So you have to understand the psychology of millions and millions of people. Equity is very simple thing. Like bond have a coupon. Through coupon, you can figure out whether this is a great right time to invest or not. Similarly, in equity, you could look at the P multiple, price to book value, dividend yield, market cap to GDP, historical return, and can take a call whether one should be looking or how much one should be looking and where one should be looking at investing. So keep all these things in mind. So I'm telling you today, mark my word, over the next 3 to 5, 10 years, equity will outperform gold and silver both.
Right. Sure, Seth. I think that was a very nice analysis of how to look at things from all kinds of perspective. So yeah, that was definitely worth it. So now, sir, move certain nuances on equity investing, and I would like your opinion on that because yes, people have started to invest in equity, but still they make a lot of mistakes or they still have a lot of questions around it. One that has been a clear winner is mutual funds. There are no two doubts about it. That a lot of people have achieved financial freedom because of mutual funds, and these are normal salary guys who just trusted their MFD or their simple financial advisor, and they have held it for years, and now they are enjoying the fruits of SWPs via that. But still, a lot of people, what I see is uh, they're still trying to time markets even within mutual funds, right? कि इज एस आई पी बेटर और इज लमसम बेटर कि मैं 26,000 पे क्यों खरीदूँ, मैं तो जब मार्केट 25,000 पे आएगी तब अपने एस आई पीज डाल दूंगा लमसम में, मैं अभी होल्ड करके रख लेता हूँ कैश. सो वांटेड टू नो योर ओपिनियन ऑन पर्टिकुलरली ऑन एस आई पी वर्सेज लमसम. व्हाट डू यू थिंक is better, or should we even have that debate, or both have a place to coexist?
Actually, we can have a separate session on lump sum and SIP, and I'll explain nuances of both. Suppose you have SIP. These are not, contradictory product. SIP is the way to invest when you don't have a cash flow. Cash flow is coming in future. And lump sum is when you already have a cash flow in hand. So, if SIP generate 12% XIRR,
Right.
the lump sum need to generate 6% CAGR to create same kind of wealth, because the entire corpus get invested from day one.
Right.
And in SIP, the same corpus get invested over
Over a
3 to
period of
5 year period. So if you look at absolute corpus, then lump sum is much better way of investing. The question is that if you're lump sum and if you're scared of the mind of the market, I'll give 2-3 ways to look at investing. One is, don't invest entire thing at one go. You could look at either simple STP where you invest the same money could be invested in 6, 12, 18, 24 month equal installment. There's a one way to look at investing. Second way to look at investing is, do you do lump sum in debt fund? You transfer the gain in equities. So your principal is protected, and when you feel comfortable, invest more. Third is, you invest part of the money, say 50 to 60% into equity, and put 15% CAGR on that. Suppose you invested 50 lakh rupees and after 1 month 50 become 45, invest 5 plus 50% by 1.17. So market keep dipping, you're putting more and more money. If you do that, you can make more money. But all these things are very easy said than done, because when the market goes down from 26 to 22, people expect it will go down to 18.
Right.
So they always, the more money is lost in waiting for correction than correction itself. And that cycle keep going on. So it is very important. You need to be disciplined. And discipline is not virtue of humanity.
Right. And essentially, SIP, one of the core reasons why SIPs was introduced is so that you can give away the pressure of timing the market, right?
Yes, timing the market. Rupee cost averaging one wonderfully well in your favor. It brings a certain sort of discipline in your life. Yeah.
So, sir, one of the previous discussions that we had, I wanted to circle back on that when you said, that the biggest problem with Indian retail investors is they're always chasing the hottest things. So right now it's gold and silver. Like you said, 2 years ago, maybe it was chemicals. Few years ago, that was something else. And today we are living in 2026, where Indians have now more and more exposure to all kinds of asset classes, be it in the form of crypto, digital, mutual funds, individual stocks. Like we have everything. We have REITs also today. So exposure is something we have, right? But how do we make sure that we are not buying into this hottest trend and we keep ourselves, again, that discipline concept comes in and everything comes in. But it becomes really painful because when all the news channels are talking about that thing, the newspapers are talking about that thing, CIOs are talking about that particular thing. The news anchors are always asking investing folks, what are your opinions on gold, silver right now? Then how do we sort of make ourselves calm that we are not either missing out on something, or how do we look at that particular scenario while that thing is happening to us in real time?
Very difficult because the behavioral part comes into picture. Just look at the animal world. The animal which run the fastest generally lasts for 10, 12, 25 years. The animal which lasts for 100 years are the animal which move very slowly. The tortoise and elephant.
Right.
Okay. And if you have to do 100-kilometer race, look at dog, look at ostrich, look at cheetah, look at horse, look at human being, look at any animal. It is a human being who will complete the 100-kilometer race. No animal will be able to complete 100-kilometer race
Right.
because they don't have endurance. They can run very fast. So investing is like that. Investing is not catching momentum. It look very exciting, it look very glamorous. But one of the biggest challenge in investing is very honestly not multi-bagger or getting the hot end. Sometimes you'll get hot end, but you can't get it consistently. The challenge is, can you grow your wealth 12 to 18% compounded over a 20, 30, 40, 50 years? That is the number one challenge. Number two challenge, can you bring the discipline in the family that this is the way we need to manage the money? If you look at big industries, big industrial houses, the family take a decision. There's an investment council, lots of discussion happen between the family member. The younger person get introduced. In the beginning, they just listen to the conversation. They pick interesting stuff.
Right.
And the family seniors figure out that he is the right person who will pick the banner to the family and take it to next level. So it is very important in your family, you inculcate that kind of discipline and avoid as much as possible 99.99% of the noise because it is plain noise. Suppose you are on diet and you're watching TV. What do you see? You're opening the newspaper. What do you see? You go to a departmental store. What do you see? Suppose I am on a diet. Very honestly, there's no food available which can help me. Everything is very attractively packaged, very yummy, and all kind of stuff, all kind of things are being talked about them, but they're not healthy. The same logic applies in investing. So staying disciplined is
Non-negotiable.
but for that you need help. I'm saying that people like us, our job is not to deliver you the best investment performance. We can't do that. Our job is to make you stay disciplined, bring finance into focus. I'll give some interesting data. Every year, around 55 lakh families in India goes into bankruptcy because of inadequate health insurance.
Right.
Now, उसके लिए तो आपको बताने की जरूरत नहीं क्या करना है आपको. Okay. उसके पहले आपका health. Okay. So I think it's very important that we put our perspective or focus on right places. So I was doing a presentation to a CA institute. So one chartered accountant got up and told me that, why we need to go through you guys. We can go directly. I can save 1% more. I can generate better return. I said, assume that you do that. How much time we need to spend to figure out where to invest and all that? वो वाला दिन का 1-2 घंटा हम लगाते हैं, हो जाता हमारा काम. I said, so let's assume that you deliver 2% more than the fund manager, who's 24/7 is doing that job. And you are just 2 hours, you can beat them. Let's give it to you. But what is the mathematics of your life? How healthy you are? What kind of relationship you have with your spouses, with your children, with your family members? Are you enjoying your life? Are you pursuing your hobbies? Or are you just generating 2% additional return and getting happy about it? So life is much beyond these. And something which can be outsourced, something where you have proven data over 30 years.
Right.
You're not trusting that. And then say, I'll do it better job. Good luck.
Yeah, that's absolutely right. So in investing, another, let's say, behavioral thing that I wanted to talk about was, so there are two paradoxes that I see. So one is obviously that we have been taught that buy low, sell high is one of the ways you make money in equity investing. Now, but when it comes to mutual funds, because we want to eliminate the part of timing the markets, we have SIPs. Now, but there are certain people who sort of keep rotating, either, like the paradox is, from 1980s globally, even no mutual fund has, let's say, gone, completely broke or has delivered.
At least not an equity fund, no way.
Yeah. Right. So that has never happened in mutual funds. Or in order to, like you said, that the goal is to compound your money somewhere in the band of 12 to 18% over the next 30, 40 years. Now that alpha, which is beyond 12%, which is let's say 15 and those numbers and above, do we have to follow that buy low, sell high, even in the case of mutual funds?
Yes, it can be done very honestly, but it can be done through thematic funds.
Right.
And I'm a big fan of thematic fund because the themes have become very big, very large, but it's very counterintuitive. You should invest in a theme where historical returns are very low.
Right.
And after you started investing, even for 6 months, 1 year, the sector may not perform. And you should always avoid the theme which has done exceedingly well. And I'm not talking about 1 or 2 years, just look at 10-year data. So suppose you look at 10-year data today. Healthcare returns are in single digit, 6%, 5.5 to 6%.
Right.
So in my opinion, looking at healthcare is a fascinating idea right now. But if you talk to many people, healthcare ko touch ही नहीं करना है. Healthcare is not something we should be touching. 3 years back, the 10-year return on gold was in single digit. But if you started investing at that time, the gold has remained flat, but equity market went up 20 to 30%. Suppose I recommended you to invest in gold at that time, and somebody also recommended you to invest in equity, the portfolio would look very differently. And you would say कि यार मंत्री जी आपने गोल्ड में कहाँ पैसा डलवा दिया, तो मिड में स्मॉल कैप बहुत अच्छा कर रहा है. So that perspective we need to keep in mind. And one more thing one need to keep in mind is that do preemptive analysis, not post-mortem. If you invest today, then look at. So for instance, okay, let me cut it this way. Lots of people tell that winners keep rotating. So winners keep rotating is a great statement. But the question is that how does it help investor? We know winners keep rotating. That's fine, but who is the next winner? How do I identify the next winner? You are bringing the investor to territory where he can't defend himself. Okay, winners are rotating. So guys very confused. अच्छा यार ये मुझे करना क्या चाहिए फिर? Okay. So if that is the thing, the winners keep rotating, then you should identify who is the current winner, who is unlikely to continue the winning streak, and need to figure out who is the future winner. So for instance, today, can you tolerate 1.5, 2 years volatility in pharmaceutical category?
Right.
Then you could look at 15 to 20% CAGR from these level.
Right.
But lots of people are not very comfortable doing it. So that is the thing. So asset category which hugely underperform, not very popular, look at that asset category. But suppose today I tell you, Vishwas pharmaceutical fund में पैसा डालना चाहिए. Then you ask me, sir, show me the track record. The 1 year returns are negative. 5 year returns are okay because it is a base effect. 10 year returns are a single digit. What will you tell me?
Obviously, most of people will answer, sir, ये तो.
और मैं आपको गोल्ड ETF बोल दूं अभी तो सर आप विश्वास गोल्ड में डालो. When you do comparison of gold and silver and pharma, the gap looks huge.
Right.
Historical return looks very good. So what will you do? You end up investing in gold and silver. But the right thing to do is to look at investing in pharma. But it is very, very difficult to achieve.
Right.
Because people love, मतलब आप बुफे में एक करेला की सब्जी रखो और दूसरे मिठाई रखो, पानी पूरी रखो, लोग कहाँ पे जाएंगे आप देख लो, वही इस इन्वेस्टिंग बिजनेस के अंदर होता है.
Right. Absolutely. Sir, I think one last question that I would want to ask is, and this is not, let's say, particularly about equity investing, but this is more from a saving standpoint, right? Given that our salaries are increasing, our consumption is also increasing. Like consumption is one of the hottest themes in India for next 10, 15 years. What are the trends that you're seeing currently, especially, in both categories of, let's say, younger people or let's say even people who, let's say, are 35 plus? Generally, how much savings, and I'm not saying particularly savings rate that you should be investing in equities, like how much should you be saving of a particular of your monthly income and invest in equities. But what I'm particularly asking is because people definitely diversify their money. What is the kind of correct savings rate people should have, or it's not, let's say, a one for all approach? It should be looked at it differently, be based on their situations and everything. But generally, what kind of mindset we should have towards savings?
No, it very honestly depends on every individual. So I give an analogy of health. Health. Suppose somebody is 100 kg plus. The kind of diet recommended to him will be very different. The kind of exercise recommended to him very different because he can't be asked to run because it will put too much pressure on the knee. Somebody is like 50, 60, he want to 70 kg, he want to improve his fitness, different kind of diet is prescribed to that person. So it also depend on every individual. Let's first talk about poor people, lower middle class, middle classes. I think they need to make budget. It is very, very important. And need to ask hard question from themselves. Can I reduce my expenses by 5% or 10%? What are the expenses where I can cut it down? Look at cutting down those expenses. Okay. And it is a tough choice, but they need to make tough choices. And then need to look at how much I can give to equity mutual fund. 5%, 10%. If you give 20% to equity mutual fund for 20 years, I think your retirement is sorted. But I also need to think of kids' education, kids' wedding, your own other emergency goal. So first and foremost thing to do is to prepare a budget for yourself. Need help, take help, because lots of people are, when it comes to money, they get psyched up. They don't want to, talk about because it is they find it very difficult to handle it. So seek professional help to make budget and then invest sensibly. Stay on the course, identify right kind of person to help you, and it will be misfortune if Indian equity market, which deliver 44 year, 45 years of outstanding performance, but is not reached out to too many people, it will be, I would say, a gross, what word? I think it will be a very unfortunate or gross inability on our part to not to help people to come into equity market. I think it is responsibility to all of us to take equity culture to every household in India and make them more prosperous.
Right, understood. That's great, sir. Although just one last question I'll still ask is that there is a lot of negativity right now. I'm not talking about equity market standpoint. I'm just talking about the entire HNI segment, like the semi-ultra HNIs of India. A lot of them are leaving. Like this is often talked about that because of income tax issues, because of the amount of taxes that they're paying versus what services, let's say, are given to them. It's not at par, and it's ultimately the 1% that is paying the taxes is bearing, let's say, for the entire country. Then there is a case which people make, when there are so many issues within India, right? We are definitely not going to be leaders in tech because, let's say, that's not our core expertise, right? The kind of capital allocation that is needed to sort of make the ChatGPTs of the world or the TSMCs of the world, we don't have that.
They are doing because they don't have people.
Right.
They are finding a solution for people-less world.
Right.
So they are doing where they should be doing it.
Right. So that is the question I'm coming to, because a lot of people keep on comparing us.
No, so let them compare. They're the biggest loser.
Right.
So if you look at 30 years back, becoming NRI was a great thing.
Right.
Traveling abroad, going abroad, getting green card, whatever. For some people it is played, for some people it is not being played.
Right.
Lots of kids are being educated into international school. It is going to be a big bubble going forward. So India will have its own problem. It's like your mother. It's like your spouse. It's like your family. You decide what you want to do. You want to abandon, go away. Your choice. No problem. You will be loser. India will not be loser. India will grow because 145 crore log hai bhai. Somebody else will take your place. People are crazy to take your place. People are waiting to take your place. And this journey will continue. It is not happening for the first time. And it is not from India people are living. Wealthy people are living from China, from London, from various parts of the world coming to UAE. And by the way, in next 10 years, Andaman and Nicobar will become the big hub.
Right. Got it. So one point that I wanted to highlight was that what I think, firstly, this is that people look at India from the very wrong perspective of that what has worked for China or US or any other country or Japan, let's say, is something that will work for us also.
Because if I have to control you, if I have to govern you, like this elephant,
right?
How the elephant get control? Through Ankush. There's a Mahavat. And he got the thing through his control, the elephant.
Right.
So if I have to control you, if I have to, I need to make you my slave, I need to make my colony. I have to control your mind. I need to tell you, your food is bad, the way you cook, your cooking is bad, your religion is bad, your way of educating is bad, the way you think is bad. This is the way the world should move. And then you start questioning everything. You become there, this is what is happening. But it won't, but it is changing. but changing very slowly. For some people, it will never change. So, Indian market or India is the way you want to look at it. Suppose you want to get cynical, be it. Okay. And suppose you want to get optimist, be it. It is your choice. Nobody forcing you.
Yeah. So, in your opinion, what are the three greatest trends of India for next 10, 15 years, which will sort of create a lot of wealth for Indians and will make us one of the most prosperous countries going forward?
One is our population, incredibly talented bunch of people. The policies are changing. The government is changing from capex to making capex enabling things.
Right.
The world doesn't like 145 crore nation coming as a challenge. So we will pull down. So you will have deep state working, creating in lots of trouble in this country. But the biggest strength, in my opinion, of our country is our Sanatan Dharma, where it keeps us rooted, it keeps us open-minded, and we keep changing with time. So we don't have any sacrosanct book or this is the way the world has to move. We are a nature worshippers. So we would lead the world, not today, 50 or 60 or 100 years down the line, because we gave lots of things to the world.
Right.
And forget about AI, we taught how to live. So none of our sages had made a book of 7 habits of highly effective people or, we told people how to live a good life, how to be a good human being. So I think this will keep India in a good state. So if you ask me one thing, it is our belief system which grew with the nature. I think that will keep us
Right.
grounded and prosperous.
Right. Thank you so much, sir, for doing this today.
My pleasure.
And it was, I think, wonderful having you again. I think people do tell us in the comments, viewers, like what kind of insights you like today, the kind of learnings that you grabbed today and you will implement in your wealth creation journey. Thank you so much for joining us again.